This is FinTech Futures at Sibos, and I'm joined by Joon Kim of BNY Mellon. Joon, thank you so much for taking the time out to speak to us.
Thanks for having me.
Excellent. And just to get started, I'd like to give us a quick introduction to yourself and your role at BNY.
Joon Kim. I've been with BNY Mellon for the last 8 years. I manage the global trade finance products and portfolio management for treasury services.
Excellent, excellent. And you're here this week. You're going to be speaking on a panel about corporate-to-bank APIs for guarantees. For those unable to attend, can you give us a quick rundown of that and some of the key takeaways from that discussion?
Great. So if you think about guarantees and the standbys when it comes to trade finance, typically what happens is there is not a lot of standard. So people tend to use Swift messages, but essentially it becomes a free format. So what that end up happening is that people have to review, and there is no consistency in terms of a format. So you do waste a lot of time in terms of time to review, time to execution, time to process, which results in a very negative client experience. And every bank has a different rules and set of standards and when they're handling in each transaction. So what Swift API is trying to accomplish is creating a standardization where the banks can come in and pull out through the API to create a standardized messaging type. So when banks are talking to one another, when the banks are talking to one another, that they have a clear understanding what that format is. So what that does is essentially, in summary, significant progress in terms of standardization, increase in efficiency, increase in time to process. And so therefore, the clients can do much more of a transactions rather than trying to struggle fixing the issues versus increasing the volumes of transactions that we can facilitate for the clients.
Excellent, excellent. And I'll cover embedded finance as well while you're here. Oracle estimates the value of the embedded finance market is going to exceed $7 trillion in the next 10 years. So what would you say are some of the key areas of development now?
Yeah, so I think embedded finance can be defined many ways. So you've heard terminology such as banking as a service, capability as a service, embedded finance. So people have some degree of different definitions, right? So how we look at it from BNY Mellon perspective, how I look at it is embedded finance is something that we want to provide to the clients where they don't necessarily need to build and have the capabilities in terms of the resources, so that they can do more of the sales and focus on the revenues and the profitability rather than trying to build a shop and incur a fixed cost, negative IRR, returns, and etc. So some of the things you can think about it from the example perspective is trade outsourcing. So if you think about trade outsourcing, what is that? You need to service your clients internationally. But in order to do so, I have to have various Swift big capabilities, RMAs with the corresponding banks around the globe. You also need to have a credit component, as well as you need to have a network of offices to facilitate these transactions, as well as building an operational shop. So if you think about all this, it creates a huge burden for those banks who is trying to build a infrastructure, and not being able to forecast what that trade volume looks like becomes a very challenging task. So how we come into play is we provide, as an example, a portal that has a look and feel of that particular customer, and providing the portal so they don't have to build it. And then once the transactions comes through, our department will represent on behalf of that particular bank and process those transactions for them. So what that does is that they don't necessarily have worry about the processing component, and they can focus on the front line, as well as in the meantime, what we are doing is providing the infrastructure of the services without those guys being able to incur the fixed cost. So I would think it in the following fashion. So you can buy a system, you can build a system. Embedded finance or trade outsourcing could be something in between, where it could be renting. You're renting a service so that you can facilitate the transaction. And then there are other types of embedded finance, such as if they do not have a credit facility to cover a particular trade transaction. Instead of creating a facility where that bank may not be able to do so, they use a correspondent bank such as ourselves to see whether that bank is able to provide that risk mitigation service. That could be a part of embedded finance. The other component may be something to the effect of I have to have a many Swift authentication key messagings with various banks around the globe. Is that the most efficient way to do so versus can a correspondent bank help assisting relaying those messages or transacting, facilitating those transactions, leveraging the correspondent banking relationships we have around the globe. So I think there are different aspects of the embedded finance. And the other one is optimization of the capital today. So if you think about what does that mean from the optimization of the capital, people have constraints on the credit facility. Doesn't mean you reject once it hits the ceiling. The collaborative effort of embedded finance could be, I want to find a partner who can buy my assets. So you can use a correspondent banking relationship to sell those assets that they cannot cover to another party. And you can do that in a vice versa, so that what that does is an increased collaboration allows us to do more transaction. And what does that yield at the end of the day, at a high level, is we are able to facilitate more transactions for the clients, which is good for trade, which is good for GDP, and good for the overall economy of the state of the economy.
Excellent, excellent. And looking at trade finance then in particular, what are some of the key challenges there at the moment, and how can embedded trade finance really help some of those challenges?
Yeah, so the biggest problem is, this is a very old industry where if you think about a settlement of a trade transactions, whether you're on the import side or the export side, you don't necessarily, if you are on the import side, you don't want to pay me if I gave you some sort of a PDF copy and say this is original, right? So it sounds wonderful. Why don't we digitize? But would you pay me if I gave you some sort of a PDF file? Probably not. So this is part of the reason as to why paper has played a very instrumental instrument in terms of when you want to settle those transactions. So we are not so, I think the journey we're taking from the industry perspective is how do we sort of digitize those things so we can move those instruments quicker and faster, and both parties understand those instrument that is being transmitted in a digital fashion is authentic, is through the digital journey. So what Swift, what banks are working on is how do we authenticate? Can we make sure that the digital standard that between the banks are going to be treated where that the digital copy that has been transmitted is being can be treated as an original. So if you look at MLETR, the recent development in the UK and the UAE region is basically essentially saying you can now, with the right level of standardization and processing agreement, that you can treat the digital copy as the original. So this is a really a very positive progress. So once all the counterparties around the globe who are involved in the trade can adapt to these things, so that can result in faster transmission. So I think it was a long-winded answer, but what that means is the digital component converting to the manual to paper is a critical journey. And the second component is that you talked about how does embedded finance can help. So some of the things I talked about can certainly create a services that's going to create value for the clients. But I think the other important component is maybe 3-4 years back, I would say the fintech was perceived as more of a competitor to the banking industry. But I think what's being realized now by many financial institutions, including ourselves, who's involved in the trade finance side, see the need for the collaborative effort we need to have with the fintech, i.e., they have technology and the SMEs that we don't necessarily have. So how do we leverage that technology with the business aspect from the banking perspective and combine those solutions so that we can create a better experience for the clients?
Excellent, excellent. And you mentioned a few things there, but is there any more technologies, initiatives out there that exist at the moment in the trade finance space that you're particularly excited by?
So I think in the long run, so some of the things that we talked about is related to the traditional trade, letters of credit, and etc. So when you look at the corporate space, you know the statistics vary here and there, but about 85% of the total trade is being settled under the open account. So let's say about 15% of the transactions are being settled under the letter of credit. On the open account space, what can we do? So there is a significant amount of progress that came out, blockchain to platform-driven digitization. You don't need to have a paper to process these things. So I think it is an exciting field, yet at the same time, some of the things we need to sort of think about is what is the problem that we are trying to solve, right? So I think one of the things we need to sort of review is let's use a blockchain technology. Okay, so I'll give you an example of how blockchain may work in terms of corporate supply chain financing and receivables. So if you gave me goods and invoices, and then I created the financing for you, that particular shipment of the goods and services that you have given it to me belongs to me. So in case you fail to pay, I perhaps may have a possession of that goods, right? Sounds wonderful. The part of the problem is that if you're a bad actor, you can potentially take that invoice to a multiple banks and create double, quadruple, different types of pricing. So that's why you sometimes see scandals on the warehouse financing. The value of the warehouse was $100, but that particular counterparty was able to borrow tens of thousands of dollars as a result of creating the double financing. So these are the areas where the blockchain can create a very helpful solution, i.e., once you finance, there is a clear track record that this financing belongs to A. So when a B or C is being entertained for that same transaction, they have a full visibility that belongs to A. I should not be doing the financing. That's the beauty about the blockchain, right? So I think the methodology, technology is there. The one thing we need to, however, to try to solve is how do we make sure that what we are reviewing is the global visibility. So if we are operating in a certain circle where certain banks or the counterparties can review, but if they go outside of that network, they can potentially create a similar scheme where we can potentially have another double financing involved because you are operating in a different network. So I think while the blockchain and the technology is going to be very, very important from the technical perspective, what we really need to work on is the interoperability of the network. And number two is creating a consistent standardization, if we can, from the multiple jurisdictions. So if each jurisdiction has a different set of rules, it creates quite a confusion and creates a significant amount of spider web, right? But if we can find a way where we can have an interoperable network along with the consistent standards, that will allow the blockchain technology to create a much greater solutions where people will have a full visibility so that we can potentially avoid the fraud, the money laundering, different aspects of the AML component that all banks are taking and looking at.
Excellent, excellent. And just to finish off, I mean, you mentioned interoperability there. I was speaking on a panel at last year's Sibos actually about interoperability in trade finance, whether it was possible across different countries, different verticals. Very inconclusive at that time. A year on, I mean, how do you think we've been progressing there, and do you think it's still possible going forward?
Yeah, so I think although you don't see it, I think the progress is being made. So if you think about a SWIFT, what is a SWIFT? It's really a network that everybody goes into. So when we talk about trade finance, MT700 series and etc., all banks go through an MT700 message type through the SWIFT. So that's the only way how we can communicate. But when it comes to the open account, there is no network to go deliver those messages. So what we end up is having all these bilateral individual networks that's being created. So the idea of creating a network for an open account is a critical one, but you cannot, one person just wakes up in the morning and let's create a one global network so everybody can come in. So there has been series of attempts of, different types of network, Marco Polo, Contour, you name some of these networks that were being transmitted. But at the end of the day, at the beginning, what has happened is they all wanted to invite the banks then to be a part of the consortium into each of these networks. And if you're a bank, says, okay, which one is the one that makes sense? Which one doesn't? How do you make a determination? So therefore, it became a challenging where the banks had very difficult time making those decisions. I think fast forward a few years after, is that I think people are beginning to realize the importance of what you're talking about, interoperability. My job is not to create a network. That was the first initial. But now the first objective is I need to create a network that can actually interoperate with the other network. So when they're thinking about that framework, when the four guys meet individually, they all have the same objectives to say how we can actually connect the dots onto four. So we can create a multiplier effect. 1 + 1 is going to be the hardest, but 2 + 2 becomes easier. 4 + 4 becomes easier. So then we can create an operable network where everybody can participate, not needing to worry about which network do I have to join.
Exciting times ahead. Well, thank you so much, Joon, again, for taking the time out to speak with us. It's been a pleasure.
Thank you very much. Thanks for having me.
Thanks.